Hi. Today we're going to look at general ledger and subsidiary ledgers. We will start off by looking at the definition of general ledger. General ledger consists of accounts of all assets, liabilities, and owner's equity. For examples, you would find accounts such as cash, vehicle, accounts receivable, accounts payable, loan, capital, and etc. in general ledger. The general ledger provides the balance in each of the accounts. For example, the accounts receivable shows amounts due from customers. Accounts payable shows amounts owed to creditors. Let's look at the format of general ledger. There are two forms of format for general ledger, namely, columnar form and T-account form. Let us look at an example, cash account in general ledger. For columnar form, there are 5 columns. We would include date, particulars, reference, amount in debit or credit column, and the balance. Please note that balance of the account will be updated for each transaction. For T-account form, there are 2 sides. Debit is on the left, while credit is on the right. We would have date, particulars, reference, amount on both sides of the T-account. Different with columnar form, the balance of the account will be updated once, which is at the end of the month, and the ending balance will be brought forward to following month as beginning balance. Next, we will discuss about where do the entries in general ledger come from. The entries actually come from the books of original entry, which are general journal, and 4 special journals. The process transferring entries from journals into the appropriate ledgers, we name this process as posting. Let's look at the example of posting from journal to general ledger. For example, the entries recorded in vehicle account and capital account of general ledger are posted from general journal. Vehicle account is debited in the general journal entry, so we have to do posting by opening a vehicle account in general ledger and record the amount in the debit column. On the other hand, capital account is credited in the general journal entry, so we have to do posting by opening a capital account in general ledger and record the amount in the credit column. And the balances of all the accounts in the general ledger won't be transferred to trial balance at the end of the counting period. Next, we're going to look at Subtopic 3.4, Subsidiary Ledgers. What are subsidiary ledgers? How is it different from general ledger? A subsidiary ledger is a group of accounts with a common characteristic. It is also an addition and an expansion of the general ledger. 2 common subsidiary ledgers are accounts receivable subsidiary ledger, accounts payable subsidiary ledger. Accounts receivable subsidiary ledger record all transactions related to debtors with their balances. Accounts payable subsidiary ledger record all transactions related to creditors with their balances. Relationship of general ledger and subsidiary ledgers. The detailed data from a subsidiary ledger will be summarized by the general ledger control account. For example, the detailed data from the accounts receivable subsidiary ledger are summarized in accounts receivable account in the general ledger. At the end of an accounting period, each general ledger control account balance must equal the composite balance of the individual accounts in the related subsidiary ledger. For example, the balance in accounts receivable account in general ledger must equal the total of the accounts receivable subsidiary ledger balances of customers or debtors A, B, and C. Similarly, the balance in accounts payable account in general ledger must equal the total of the accounts payable subsidiary ledger balances of creditors X, Y, and Z. Next, let us look into posting from journal to subsidiary ledger. There are 2 debtors, Jasny Enterprise and Danny Enterprise, in the sales journal. So we have to open 2 accounts in accounts receivable subsidiary ledger. One for Jasny Enterprise and another one for Danny Enterprise. The amounts would be recorded in the debit column. Alternatively, the accounts receivable subsidiary ledger can be done in T-account form as follows. There are two creditors, Doremi Enterprise and Wali Enterprise, in the purchases journal. Thus we have to open two accounts, in accounts payable subsidiary ledger. One for Doremi Enterprise, and another one for Wali Enterprise. The amounts would be recorded in the credit column. Alternatively, the accounts payable subsidiary ledger can be done in T-account form as follows.